I am definitely going to receive some angry comments on this one, but I'm going to do it anyway. 3 reasons why I'm buying Tesla and NIO stocks at these levels. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. Now, before you go off on me in the comment section, let me just explain for the millionth time. I consider both of these completely speculative stocks, and for that reason, they are both the smallest positions in my entire portfolio, and we'll talk more about that at the end of the video. So make sure you stay tuned for that. We'll talk a little bit more in terms of like the positions that they have in my portfolio. But with that said, make sure you hit the like button if you find this video entertaining, and let's go ahead and start with reason number 1. Alright guys, starting with reason number 1, it's a pretty obvious one, and that's that both stocks have been dropping by pretty large amounts recently. Now, if you've seen my previous videos, then you know that I'm much more comfortable buying stocks when they're going down rather than when they're going up. That isn't to say that these stocks can't continue dropping in the short term, but I really have no idea where the bottom is, and what I do know is that I like where these companies are headed in terms of their future potential and what they're currently doing, which we'll take a look at a little bit later in the video. In any case, starting with Tesla, in the past 5 years, their stock has been very volatile, but has ultimately ended the time period relatively flat, only up about 15%, despite having accomplished many different feats during that time. More recently, however, they've dropped by almost 19% in the past year, over 26% in 2019 alone, and if you look at their 52-week range, they've now dropped by about 37% from their 52-week high to now trading in the $230 to $240 range. By the way, I added pretty heavily in the $230 range, but they popped up today at the time of this recording by around $10, so their range is a little higher now. In any case, this is a company that I believe in for the long term, so I really do think that they can reach those higher levels again sometime in the future, which would obviously leave a ton of upside potential if my thesis proves correct. Now, when looking at NIO, they only recently went public last year, but their stock is already down over 28% in the past year, over 25% in 2019 alone, and from their 52-week high, they've now dropped by over 65% to trading in the mid $4 range, which is where I've mostly been buying. By the way, I'm still down in my position overall because I have an average cost basis in the low $5 range, but I'm getting pretty close to lowering that down to $4 as long as the stock keeps trading here at these levels, and I can keep adding when my budget allows for it. But that brings us to reason number 2, and that's that both companies are doing some pretty revolutionary things with their technologies. When looking at Tesla specifically, one firm that has gained a lot of attention for covering Tesla recently is ARK Invest, who focuses solely on investing in disruptive innovations and has created several ETFs for that very purpose. They also gained a lot of attention when Musk was talking about taking Tesla private for $420 a share, and ARK basically came out and said that it would be a horrible decision because they felt that Tesla should be valued somewhere between $700 and $4,000 in the next 5 years based on their research, which would obviously be a huge increase even at the lowest of the range. But a big reason why they believe this is that their research shows that Tesla is about 3 years ahead of the competition in 3 critical areas. Area 1 is battery production and efficiency, as they estimate that Tesla will be the world's largest mobile battery producer by the end of the year. Area 2 is that Tesla should be well ahead of any competition in autonomous hardware, as their autopilot artificial intelligence supercomputer chip is said to be a 2,000% improvement on the NVIDIA system that it replaces, according to Elon Musk. Not to mention that ARK believes that the market for providing these autonomous platforms will eventually be worth trillions of dollars, yet very few analysts even consider this in their valuation models for Tesla. And that sort of brings us to area number 3, which is that Tesla has already collected way more autonomous data from their customers than any other competitor out there, which would obviously aid them in developing autonomous technologies. In fact, Teslas equipped with first and second generation autopilot have already collected 8 billion miles of data so far, while the next closest competitor in Waymo only had about 10 million miles as of October of last year. On top of all of that, they're already finishing up the structural construction of their new Shanghai Gigafactory in China, which, by the way, this is a photo of it here from just a few days ago, and you can see that they're working hard to finish the overall structure because Shanghai usually gets a lot of rain in June through August, but since they're almost finished with the outside structure, they can continue working on the factory from the inside without being interrupted, and most likely hit that Q4 target of full production at the end of the year for their Model 3. But they also have plans to launch a smaller crossover SUV called the Model Y, and it's only going to cost around $39,000 at the cheapest version. Keep in mind that the US compact SUV segment climbed by double digits last year and currently is the largest auto segment in the US and about 50% larger than the next closest segment, which was large pickups. By the way, Tesla also has plans to launch a pickup for that market as well. And as if all of this wasn't enough, they're even launching a new insurance product within the next month that they can target to customers with precision thanks to all of that driver data that we talked about earlier. And we also found out that Tesla plans to reach full autonomy next year with plans to launch a robo-taxi service with potentially 1 million of them already hitting the road by that same year, pending regulatory approval. Now, when looking at NIO, they're very similar to Tesla, except for 3 important factors. They only started selling their ES8 vehicles less than a year ago, they only operate in China for now, and they currently have a state-run manufacturer handle all of their manufacturing through a partnership. But when looking at technology and performance, NIO is actually pretty close to Tesla with their ES8 SUV carrying a range of 425 miles, which by the way is NEDC range, so EPA would be a lot lower, but it also does 0 to 60 in just 4.4 seconds and has a max horsepower of 650. They also come with an artificial intelligence assistant called Nomi. You can get an at-home charger. You can go to battery swap locations that are positioned around 100 miles from each other, covering 1,200 miles, and can swap your battery in about 3 minutes, which is something that I don't even think Tesla offers. They also have fast charging stations, and if you don't have time to go to one of those locations, they'll just send a charging van to you that can add 60 miles of range in just 10 minutes, which is pretty impressive. And when looking at autonomous functionalities, NIO already offers a wide variety of functions that utilize radar, ultrasonic sensors, and visual cameras that enable lane departure warnings, automatic braking, traffic jam assist, parking assist, adaptive cruise control, blind spot detection, and they even offer their own version of Tesla Summon, which is the feature that kind of makes your car drive to you if you're like in a parking lot or have a similar scenario. And it doesn't really stop there, since they continuously send over-the-air updates and are already working on their NIO Platform 2.0 that will offer true level 4 autonomy, basically meaning that you could literally fall asleep in your car as it drives. Yet despite all of these features, NIO EVs are still way cheaper than anything Tesla currently offers in China. The Model S and the Model X have starting prices of over 700,000 yuan, while the Model 3 still comes in at around 400 to 500,000 yuan. But NIO's ES8, which is a 7-seater SUV, only starts at less than 450,000 yuan, and that's before subsidies. They even have a smaller crossover SUV launching later this year that has more range, but it still starts at only around 350,000 yuan, and that's even with a dual motor. And again, that's a crossover SUV, not just a little sedan. And while it is true that China is flooded with EV makers right now, the vast majority are cheap EVs that have nowhere near the same technologies of something like a Tesla or a NIO. So the fact that NIO doesn't really have a lot of major competition other than Tesla in the luxury EV market, yet they offer similar performance for a drastically lower price, makes this a very interesting company to watch. And that ultimately brings us to reason number 3, which is the overall market. I actually believe that there's plenty of room for both Tesla and NIO, and a lot of other EV makers too, when you consider how much the industry is already growing and how much room it still has left to grow, especially in China, which already makes up around 40% of the world's entire electric vehicle fleet. And in the US, electric vehicles only make up about 2% of all US auto sales, which by the way, Tesla completely dominates without any competitor being even remotely close to their Model 3. But if we look at another chart here from the World Economic Forum, they estimate that electric vehicles will outsell traditional ICE vehicles in just about 20 years. That's pretty crazy when you consider, how long ICE vehicles have been around and how much they've dominated. That may seem like a long time from now, but we're talking about electric vehicles that again only make up about 2% of all US auto sales. So that's pretty incredible growth for, I guess, that like individual sector. And looking at global EV sales within a more recent time frame, the market is still expected to grow from 118 billion in 2017 to over $500 billion by 2025 at a compound annual growth rate of over 22%, with China alone already doing close to 3 times the numbers of the US and 2 times the numbers of all of Europe combined. For context, China alone is buying 1 out of every 2 electric vehicles sold in the entire world, and their amazing growth and dominance is expected to continue well into the future, according to Bloomberg, all of which bodes very well for a small EV startup in China like NIO. And according to eTechnica, EV cars will still make just around 8% of the total vehicle market in China this year, and that's coming off of just 4% last year and 2% the year before that. And when looking at Tesla, the recent launch of the Model 3 in China, coupled with the eventual launch of the Model Y, coupled with the fact that they'll be building both of them at a lower cost in Shanghai, also bodes very well for Tesla as well. Not to mention that Tesla recently started selling their Model 3 in Europe, and some of the biggest EV markets in the world are actually European countries, which I've highlighted on this chart here. And many of those also carry the highest gas prices in the world as well, which means that they will be in demand for electric vehicles, or so I would have to assume. Needless to say, I think both companies have a tremendous opportunity to do something really special over the long term, but if I had to choose between the two, I think I would personally go with Tesla right now because they're more proven, and NIO sales have been struggling more recently. But I also think that a lot of those struggles for both companies have to do with seasonality, and I think sales will start to pick back up in the second half of the year. Here's a chart from China's auto sales, and you can see huge seasonal drops at the beginning of the year that pick up later on. And then here's a chart of US auto sales, and you can literally see the exact same thing. Now, NIO still needs to report their Q1 earnings for 2019, and I honestly have no idea when that'll be. But we did get an update on their vehicle deliveries, and they reported a 9% positive surprise over the 3,650 guidance, coming in at 3,989 ES8s delivered. So they have delivered a bit more vehicles in this Q1 than they were anticipating that they guided for in the last quarter. But if you ask me for a prediction on that earnings, I don't like to do this. I don't like to predict earnings because I feel like it's a very, very difficult thing to do. It's pretty much impossible. But if I had to assume, I think Wall Street is still going to take their earnings as kind of a negative because it is a huge drop off in sales compared to Q4 of last year, which was very high. Again, that's because of seasonality, but Wall Street always likes to pretend like they don't see things coming and they're like, oh, what, it's that bad? Oh, we're shocked, but in reality, it's like they knew it was coming. But I just have a feeling that that's going to kind of be the scenario with NIO's Q1 earnings. I feel like Wall Street will pretend like they didn't see it coming, and then the stock will just kind of sell off and it'll go down lower. So I am kind of anticipating that the stock will go lower in the short term, but again, I want that to happen because I'm trying to lower my cost bases down to the $4 range if I can. Now, one last thing that I want to mention before we end the video is my position in these stocks, because a lot of people criticize me for investing in speculative stocks like Tesla or NIO, when in reality, I only use less than 10% of my stock market portfolio for speculative stocks. So both of these companies, by the way, Tesla and NIO combined only make up about 6% of just my stock market portfolio, just about 6%. So even if NIO was to go like bankrupt, which I get comments on that all the time, oh, I can't wait for NIO to go bankrupt and you're going to lose all your money. If NIO was to go bankrupt, I would lose like 3% of my portfolio. I've even shown you guys a screenshot in a previous video where I showed you my portfolio percentage of NIO, and I think at that time it was like 3 point something percent. So literally, if NIO goes bankrupt, it's like 3% of my portfolio. I literally couldn't care less. Like, I'm still gonna be able to sleep very well at night, and it's really not a big deal at all. So I just kind of want to set the record straight, because a lot of people leave comments also saying that Tesla is like their biggest position or their only position. Same thing with NIO. NIO is their only position. And I'm just like, man, you got to be more cautious than that. I don't think you should be putting all of your money into these companies. You got to be more realistic than that. These are very volatile stocks, and they're very speculative in nature, and they lose, the companies lose a lot of money, especially NIO. So you have to be careful there as well. Also, one last thing, in case you don't already know, my biggest stocks are like Disney, Microsoft, Amazon, Alibaba, AT&T. Like those make up the majority of my portfolio. So it's just, I'm not like complaining about the comments I receive or anything. It's whatever. I don't care what comments I receive. But just to the people who always kind of assume that something like NIO is like one of my biggest stocks, it's not. It's like 3% of my portfolio. The vast majority of my money is in those other companies. So if you ever see like, Microsoft crashing, Disney crashing, Amazon crashing, those kind of stocks, that would be a better time to, to make fun of me or whatever, to leave your angry comments or things like that. But anyway, I think that just about does it for this video. Hope you all have a nice day. Hit the like button if you enjoyed the video. Leave your comments down below. Sure, we'll get a lot of bulls and a lot of bears, and it'll be a lot of fun conversations down there. But I'll see you guys in the next one. Take care. Bye-bye.